Hi friends, welcome to A to Z Learning channel. This video is part of our current news segment where we pick up on a weekly basis the most interesting news that we help our audience, help our viewers understand in greater detail in a very independent and transparent manner. So today's video is about a similar recent business news that we have all got to know very recently. Yes, it is about Citibank deciding to exit India consumer business. Yes, this news is going around last I would say 36 hours. Some people clearly understand it, but through this video, we'll make sure that we'll help you understand with the help of four main questions. What does it mean? What is the news and what does it mean? So without any further delay, let's start our video. As I said, the news is Citibank exiting India. And when a headline like that appears on the business news channels or in the print media, a lot of people get worried. Does it mean bad news? Does it mean India is not doing something right? And that's the reason some of these big names, big global names, are exiting Indian market. What is going on? So usually these sort of news bring a general nervousness amongst the people, amongst the decision maker, and also amongst the people who are thinking of investing in India. So with this video, what we will help you understand is basically four key concepts. First of all, why are they leaving? So why is Citibank leaving? Will help you understand in a very simple manner. Then in the second part, we'll talk about what does it actually mean? Is it a bad news or is it an opportunity for other players in Indian banking market? And if it is going to be an opportunity, are there any kind of key players that who could benefit from Citibank deciding to exit Indian consumer market? So we'll understand all that in simple to understand, easy to follow detail so that you are well informed about the implication of this news. And of course, you are well aware about what has caused this news to be seen so seriously by everyone. So as I said, first question that comes to mind is why are they leaving? So why is Citibank leaving? I think to understand this, let's first remind that globally, this concept of one large bank operating from all the countries possible, that whole concept was the most favorite concept up until the 2007-2008 when we were hit by the financial crisis. Before 2007-2008, every bank, every global bank had the aspiration to become the largest bank in the world. But since 2007 and 2008, this concept of a global giant bank is absolutely non-existent, is absolutely dead and buried. No bank in the world, it doesn't matter how big they are, have got any plans, any strategy to become the global giant. They're all looking to consolidate their presence, their businesses in the key markets in which they have got a sizable presence, and that's what they are looking to consolidate. This concept of global bank is not there anymore. And Citibank or any other multinational bank, any other global bank, when they went out of their home location, which in most cases has been UK or US, um, when they ventured outside the US market, their dream was, their aspiration was to become one day world's preferred bank, world's largest bank. Given that aspiration is no longer in their strategic plan, therefore, there is no desire for them to kind of enter into the market where or stay in the market where they are not the largest player. They can't really contribute. And that's main reason when you look at the presence of the kind of banking organization in any of the kind of countries. Most countries you will find is dominated by the local players. In most countries, the top five banks are always the local banks, and that has become the reality. It happens for a number of reasons, of course, but that is the reality. And any global bank trying to enter into a new market, new country, they're always fighting for space between maybe sixth place to 10th place in that market. First five places are always dominated, occupied by the local banks. There is absolutely no chance for a global player to go from their home location to a new country and become the top bank. So that's the sort of reality which is what Citibank was also grappling with. Though retail banking is a profitable business in India, and Citibank was also making money, but Indians don't like plain vanilla banking, which is what most global banks and particularly the banks from the Western world have have moved away from the customized product solution. They are more providing the standard banking solution, and that's what they were also pushing in Indian market. And that's where your kind of mismatch start to happen. And Citibank is no different to that. Citibank, like any other global bank, had this centralization of decision making in their head office. They heard the views from the local leadership, but pretty much the decisions were made largely keeping in mind what is good for the overall bank than the bank in India or bank in any other market. And when we kind of particularly look at the Indian market, Indian banking market, Indians like free banking. Indian like a lot of customization. And that for a global player means extra costs, their need for kind of systems to be maintained accordingly. And this is not the area there where global banks want to be. And on the contrary, when you look at Indian market is full of local private players who are willing to provide whatever customization, whatever free banking our customers here in India need. So overall, I think those were the kind of main reason that increasingly Indian customers' desire for free banking customization was putting them was putting like Citibank in a very, very difficult situation. They were increasingly becoming special within their own kind of overall global organization, and therefore it didn't make sense for Citibank to continue in India. So that's the reason they are leaving. And then the second question comes is it bad for India or for Indian banking customers? First of all, let me remind you, Citibank, or for that matter, any other global bank who's operating in India, they don't have significant market share in the retail banking space. Therefore, them deciding to stay or leave has got very limited impact because they're not the big players. As I said, the top five players in India are all Indian banks. In the private space, when I look at, you kind of hear about banks like HDFC, ICICI, Axis Bank, Kotak Bank. So these are the kind of players that you see in the banking on the private side. On the state side, which have got a huge penetration, SBI is a huge bank in India with a huge network. And then, of course, there are many other public sector banks, right from your PNB, Bank of India, and you name it. So Indian customer um, does get the banking solution. There is a wide penetration, though India is still kind of at a nascent stage in terms of financial inclusion. But a global bank or Citibank deciding to kind of leave India is not significant because they had a very small market share. Second thing Is it first time India experiencing an exit like this? No, not at all. India is used to do this. They are not the first one. There has been instances in the past. For example, Bank of America back in 98 decided to kind of exit. They sold to ABN AMRO. ANZ, ANZ Grindlays Bank, they sold their operations to Standard Chartered back in 2000. Deutsche Bank sold their credit card business to IndusInd Bank in 2011. ABN AMRO sold to RBS in 2007, which was the kind of that famous deal that led to kind of probably fall of RBS in 2007. So the point I'm making is that they are not the first one. India has seen this in the past, and Citibank's exit will not have any major impact. So, short answer to the question, is it bad for India? Is probably no. No, it's not going to be bad for India. India is on a very growth, Indian banking is on a growth path, growth trajectory. Financial inclusion here in India is at a very nascent stage. Lots of fintech companies are providing banking financial solutions to Indians, and that area will continue to see growth for the foreseeable future. So could this be an opportunity for other banks in India? And I think, again, short answer would be yes, it could be a good opportunity. While Citibank had a small presence, but there are a number of players who could be interested in some part of their business, some part of their retail business. For example, if I look at their banking side of the retail business, then Kotak has made it very clear that they are very keen for inorganic growth. So, and similarly, their card business, there's a lot of consolidation. There are kind of many kind of local card players who could be interested in acquiring Citibank's credit card business and growing themselves and getting that kind of step up growth in their balance sheet. So overall, I do feel that it's an opportunity for other banks in India. And that leads to the final question, that who could be potentially benefiting, could be benefiting or interested in this opportunity. So as I said, that on the banking side, some of the names, again, these are our views. These are not confirmed by any announcement by any of these banks. But looking at the strategy that these banks have and what Citibank could kind of offer them, there seems an opportunity for them to kind of consider. Whether it will happen like that or not, who knows? But on the banking side, I feel Kotak is very interested in having some inorganic growth. So they could be interested in Citibank's banking business, the retail banking business. Similarly, smaller players could be very interested. Some of the international foreign banks may be interested, like DBS, who have recently acquired Lakshmi Villa Bank in India. So they could be looking at Citibank's business to kind of have that step up growth because they're already in the banking space through the acquisition. Similarly, some of the other foreign banks like HSBC and Standard Chartered could be interested in kind of expanding their footprint in Indian market. And they could be interested in acquiring Citibank India business. So there are kind of, and similarly, when you look at the credit card side of their business, they are the number sixth largest player in the credit card business in India. The first five are clearly, the first one is HDFC, but they're struggling right now. RBI have put a ban on them to kind of issue any new cards until they have sorted out their IT infrastructure. But if I ignore HDFC Bank for a minute, then SBI card is looking at some aggressive growth, so they may be interested in Citibank credit card business. ICICI Bank is the other player, Axis Bank, RBL, IDFC First, which have very successfully kind of embarked on their journey to become a retail bank. They don't have huge credit card book of business, so they may be interested in acquiring and having that step up growth. In summary, I would say that this opportunity that Citibank's exit will provide, there could be number of other players, local Indian banks, private banks, or foreign banks in India could be interested in that. So overall, this may turn out to be a very good opportunity for some of those banks. So I hope this simple short video on Citibank's exit you found helpful. If you've liked the content of this video, then please press the like button and share our video with your friends and family. If you've not yet subscribed our channel A to Z Learning, then I would urge you to please subscribe our channel, become part of our viewers family so that you get the notification immediately on all our new videos. So thank you very much for watching our video, and we look forward to your comments on the content of this video. So thank you so much.